Now, ladies and gentlemen, we move on to the next session. Join us for a lively conversation on how credit on UPI is revolutionizing the lending industry and making it possible for people and businesses to acquire loans quickly and affordably. Let's learn more about the advantages and disadvantages of using UPI as a platform for credit and about cutting edge technologies that are enabling millions of people to have more access to credit. To understand more about digital payments, paving way for secure and quick lending, we have our moderator for this session, Mr. Hemant Kshirsagar, who's FinTech Consulting, Bain and Company, and co-founder, India FinTech Diaries. May I request Hemant Kshirsagar to please take stage. Thank you so much, Hemant. Along with Hemant, we have an esteemed panel. We have with us this evening Sajish Pillai, who is the Managing Director and Head Assets and Strategic Alliances, Consumer Banking Group, DBS Bank India. Welcome, Sajish. We also have with us Rupesh Kumar, who is the co-founder of OneCard. Welcome, Rupesh. Thank you so much for being with us here this evening. We also have Anil Singh, who is the Country Head, Credit Cards and Merchant Acquiring, Yes Bank. Welcome, Anil. And we also have Prashant Sodhani, who is the Senior Product Head, National Payments Corporation of India. Welcome, Prashant. We now have Hemant. We ask Hemant to take this from here. Thank you.
Okay, before I start the conversation, actually I was part of the original team which started Global Fintech Festival. I never thought I'll see a room that full. This looks more like a Gadar 2 screening rather than a fintech panel which is going to happen. So this is amazing. We have come a very, very long way. We had this dream of matching Singapore Fintech Festival and crossing them. I think this year we match, next year we cross. So coming back to the topic for the day, now if we look at it, digital payments has grown at a very, very rapid pace in last few years, right? And it has mostly been driven by UPI. Now, I just read that we have crossed 10 million transaction mark per month in August. That is amazing. The question comes that since the penetration on payment has already reached, and there is the other problem to be solved, which is access to easy, fast credit at the point when the client really requires it, is there a possibility that we bring credit on in different ways on UPI rails so that customer has access to loan and all the customers have access to loan when they want it, where they want it. So that's the whole concept that we want to discuss today. Now, if we come to that, and Sajish, I would like to start with you, and we look at the different constructs which are possible, whether it's a credit card or based on today's circular, a pre-sanctioned credit line on UPI, who would be the target customer for such a product? Will it be the existing UPI users, which would be like 300 million users? There's an estimate that 30 million of them are creditworthy. Will it be the RuPay carded base? Will it be the 90 million overall carded, remove RuPay from it, then the rest of it, which is Visa, MasterCard? And, or would it be the completely the NTC set base? What is the target that we want to reach out to?
Okay, from a bank's point of view, Hemant, I think if you look at the way credit card business has grown in India, we still have about 35 to 40 million customers who hold a credit card. The total number of credit cards has now, I think, grown up to 90 million. But the number of people who have a credit card is not that high. And there are few reasons around that, right? One is the cost around distributing, serving, and managing a credit card is very high. And that has led to issuers thinking about cost and not really democratizing credit. I think this development allows multiple issuers or banks to think about the product completely differently. And if you look at the circular that came out yesterday, right, the regulator has opened the field completely wide. And what I would assume is banks like us can come in with very, very innovative products. And I was giving an example earlier. I used to be in Indonesia about a few years back. And there was a need for the daily wage earners to borrow and make payments. Right. Now, if you look at a traditional credit card, you make the transaction and the repayment of that transaction happens after 30 days or 50 days. Right? But these guys get paid on a daily basis. For them to be able to accumulate the saving and pay after the month end, not possible. These kind of use cases become possible by this kind of a rail. And I would not restrict to only the existing card customers, existing RuPay customers, existing UPI customers or NTC. I think there is enough to grow all these segments going forward.
Got it, got it. And you can look at the smile that Sajish has when it says the circle is pretty open, so there's chance to innovate. So Prashant, now coming to you, when you started as an organization thinking about increasing the credit penetration by using the UPI, what was the thinking behind it? The actual thinking when the conceptualization started?
So, Hemant, if we talk about UPI, I think UPI was launched with a vision to increase digital penetration, digital payments in the country. And since 2016, we have seen a tremendous growth in UPI, right? Now, when we talk about the kind of journey that in UPI we have built, people are so habituated that in day out, they're using UPI for all their kind of payments, right? That's what I think what we have leveraged while we were creating this entire product. And to give you just an anecdotal, that when we were creating this product, we imagined the journey that it needs to be remain same, because the people are very, very habituated. Even if we change one nuance of this journey, there will be a problem in adoptions, right? So when we created this, the entire the entire concentration or the entire focus was to build convenience, to give ease of access, which is very, very seamless, and it is digitally enabled. That is what the thought process behind. And last year in GFF only, we have, RBI governor has launched RuPay credit card on UPI, and we are seeing significant numbers in that.
Got it. And since we are on that point, Anil, I would like to bring you in. Now, if you look at the point that Sajish said, there are 90 million odd credit cards which are issued, but all of them belong to like the same 35, 40 million people who are using it. Now, when you think that the RuPay distribution, though has grown really, really fast, but still I would feel that it is still early days, it can do wonders. But till then, if you have to think about a construct to really exploit the potential of credit card on UPI, what could be the product construct that the industry should think about so that we can really exploit the potential which is there in that construct?
Thanks. So I am beginning from where Sajish left. The key point is that the latest circular has kept the entire scope wide open, right?
Yeah.
And it is up to, and if I can think of real scale, that which we are keenly interested in, the one thing that has to be solved is how do you underwrite a 0-1 customer, new to credit. Unless you solve for it, the real volumes won't come in. Now, and for which, as a bank, we need to have some way of getting some comfort for a 0-1 customer. Now, what are those avenues available? Now, of course, the entire circular also talks about this being a product which can be given by the banks and not by the fintechs or PPI players, etc. So can there be an arrangement where the banks and fintech partners or people who have great footfalls in their app, etc., can we look at a way in which the data-rich fintech partners, data is utilized to give credit card to people who are in the 0-1 category, right?
Got it.
And this can happen only if there is some amount of risk share arrangement with the people who own that data. So can there be an FLDG arrangement? Can there be a co-lending kind of an arrangement where you piggyback on the data of the partner and hence you know that some amount of risk is covered, and then the velocity will really come up. Now, as we just mentioned, I think of the UPI users, 75-80% of them are non-credit customers. So even if you remove the student population, etc., etc., still I think the volume can go significantly if I can solve for the credit part of it. And a couple of proposals I just mentioned, I mean, these are the ones we could explore. And maybe it's only one day, it's been launched, yesterday. So in the next 1 month, I would expect the entire industry to think about it creatively and come up with very innovative solutions.
Got it, got it.
Hemant, if I can come in. I think apart from the credit, there's another angle to customers' comfort with taking credit. Right? Even if you look at the credit card, you still have customers who do not understand minimum due. The new to card customer has to be educated. So if you're coming out with such a powerful product which allows customers to use lending through UPI, there's an angle around ensuring that the customers are clear about what they're getting into, what are the terms and conditions around repayment, how should they repay, and that education I think the industry together needs to come and do for this to fly.
That's a very important point, because the moment you start making availability of credit easier, anyways, RBI is a little concerned about the rapid rise in unsecured lending. So though as an industry we do want to make credit easily available to the customer, but we want to ensure that the indebtedness of the customer, especially the customer who is not really savvy, don't goes to a level that it becomes a systemic problem. So on this one, Prashant, I would like to take your views as well of saying when we think about this product and as the organization which is behind this product, what are the different thought processes or expectations that you have from the industry to make sure that these guardrails are put in place when we start thinking about making credit easier?
So Hemant, I think if I would say that NPCI is a platform player, okay? And as a platform player, what we look at is convenience, ease, speed, and scale, of course. So that's what our lines where we would work, and rest I think there's a regulator in the country, and most of the issuers do work on regulatory framework. Of course, we also do follow the regulatory framework, and under the regulatory framework itself, we will create those guardrails together with issuers, because that's how I think if we look at how NPCI works, basically we have a framework wherein we take market feedback, we develop the product, and we take approvals from SCM, wherein in the SCM itself, the issuers are there. So I think together with the ecosystem, we build those guardrails.
I think, Prashant, you spoke about market feedback. I think we have a good representation of market here itself. So I would move this question to Rupesh and Anil both. So Rupesh, you can start on your thoughts and consider this as market feedback to the product company on what could be the things that we need to think about when we think about making it easy, but ensuring that it does not end up making the customer highly indebted and the FOIR really goes up.
So, on especially the market size aspect, we do believe that there's a very long way to go. So, Sajish was saying that there are 40 million unique customers who have credit cards and maybe 90 million credit cards in the market. Credit card holders, but 90 million credit cards in the market. Right. Our estimate is, if you look at the customers who have taken credit before, but not really taken credit card, that market is additional about 100 million customers. Wow. So what we are talking about is credit cards has been a restricted access product for good reasons, but the market itself is very large. And we are not talking about new to credit customers. We are not talking about customers who have bad credit. We are talking about credit eligible customers who have serviced credit before. So the market is large, but the point is, again, what kind of guardrails you put is education of customers in terms of how the product works. It's a complicated product after all. Right. There is revolve, there's minimum amount due, there's interest-free period, so it takes some time for customers to really understand the product. So a lot of effort has to go in the education of the customer. So one of our key goals, like for example, as a company, is we have a product called OneScore, whose only goal is to teach customers about credit before we give credit to the customers, because it's a complicated product after all. So yeah, it's a large market, but it has to be fed to the customers in a way that they understand the product.
Got it. So Anil, I think Rupesh covered the point from the credit card perspective. But let's look at the other form factor which is pre-sanctioned credit line, which is even more easier because people have got really used to transacting with UPI, right? And there's not even a step which says now you have to select a card that happens before that. So if you have a pre-sanctioned credit line on UPI, how do we ensure that the customer does not end up using it too much and then at the end of the month he realizes or she realizes, okay, this is something I can't repay?
So the solution lies in some central database, bureau or beyond, or some intelligence that UPI can build on all the customers who are using their handle at a unique level, right? So can there be a scorecard, for example, that can be designed by UPI, which says that what is the velocity risk that you are facing with a customer?
Makes sense.
So you also, UPI can, the ecosystem can create a way of saying that, this is basically customer which is getting over leveraged. So because they would probably can work very closely with bureau, with some regulatory support, that kind of a mechanism will be a significant help in ensuring that at an individual level, people don't bust it, right? That is one. Two, I would further want to, there is no end to the kind of training and retraining and refresher that you need to do. We come across people who are multi-carded, but still share their OTP number with somebody. That's a reality of life. So there is no end to what you can do. Further, a customer who is used to using a UPI to make a payment through his debit card, his saving account, through an OD, which will probably be interest charged from day one. I don't know how it will come up. And then there is a credit card, which is a revolving credit, right? So there are explaining it to each one of them, probably is going, each of the products itself is going to be a absolute nightmare. And hence some amount of governance to say that, these are the people who are not recommended, for example, for a particular kind of a product, or only 2 of the 3 products. That kind of a governance also to begin with, and once the people are educated, they demonstrate certain behavior, probably we can, and hence I am just, the key to success is going to be something which is done by a principal organization like Rupe. They can bring and a consolidated data and then take a decision, create some kind of a scorecard which everybody can leverage. I think that is a very important infrastructure for us to gain scale.
Got it. Now coming to the golden question, and on this one I'll start with you, Sajish. Now if you look at all the P2M UPI transaction today, about 85% of those transactions, P2M transaction on UPI are under 500. And if you look at the guidance on credit card on UPI, any transaction which is under 2000 or is with a merchant who has an annual turnover of and has an annual turnover of 20 lakh, it is 0. Now, credit card as a product itself is a pretty expensive product for the issuer. Now, how can this product be made, or is this product going to be profitable for an issuer who is running it? Or what can be done to ensure that the product structure is such that there is enough juice in the product for the issuer to really push behind it and really want to issue it to the customers, and then we can really get the full scale that is possible through that?
That's a good question. So if you look at the moment you start comparing this breakthrough to credit card, I think we'll get into the trap of profitability. Yeah. So I think we should not think that this is a credit card product. Though there is a lot of resemblance to credit card, the ability for, like what Prashant was saying, for customers to use an already prevalent payment rails to which everybody in India is now habituated, and for banks to use those rails to provide some kind of a credit easily. I think that's what we need to look at and innovate around that. Now, from a revenue standpoint, there will be some revenues that would come through interest income, I would assume. From a cost standpoint, and that's where I think the comparison with credit cards fades. I don't need to issue a plastic. I don't need to go through an existing network, which we are talking about, where the credit card goes through. And we don't know how NPCI is going to govern the interchange around the UPI network. But those costs completely get eliminated or are minimized. And that allows for coming out with a business case which in the long run would make the customer profitable. May not be the product profitable, but the customer profitable. The moment the customer provides you with all information about him or her daily spends to you and how he or she can responsibly use credit, there are avenues for institutions like us to come and give him a personal loan, give him an education loan, give him something else which we wouldn't have been able to do in the past. So that's how I think not just the product profitability, but the customer's life cycle. How do we embed all the banking services to the customer in their life cycle using this as a hook product?
Got it. So, Rupesh, I got a bank's view on this one, but I would like to take your views because bank has an inherent advantage of the brand in which even if there is convenience, the product customer is already with them, but there are not a lot of rewards. It is still possible to really penetrate the market. But you as a fintech, reward plays an important role, and especially because you are in the card business, important role in acquiring the customer. That means when you think about it, you're also trying to cover the costs involved related to rewards. So if you stick to credit card for a second, in this case, what's your views on the profitability related to the product?
Yeah. So, see, if you have interest-free period, clearly somebody has to pay for it. Because you are giving 45 days interest-free period to the customer, so somebody has to cover the cost of funds for the customer. But, I think we underestimate the cost of servicing the customer in a credit product. See, issuance is a very small part of the cost of the product. If you're running the product, you realize that the cost of servicing the customer, the cost of, disputes and chargebacks, the cost of collecting money from the customer, these are major costs in the product. It's not really the cost of issuance of the product. So there has to be, incentives built into the product for the product to be profitable and for the market to expand. If the incentives are less, because I hear a lot of arguments about, once we remove the cost of issuance, maybe the product will become profitable. No, if you run the product on a day-to-day basis, you realize that, the customer will call you, why did you charge me interest, for example. So those are the major costs of the product, and those costs have to be considered, before we think of the profitability of the product. So I think in the current way in the CC on UPI product is constructed, I think it's brilliantly designed. The MDR structure is brilliantly designed. It serves both needs of smaller merchants as well as the needs of issuers. And we'll see how it goes, but I think it's brilliantly designed.
Fantastic. Now when we think about the point on different, and this one, Anil, is for you, because of the circular which came out yesterday, and we are talking about that it is pretty open and there are multiple things that can be done. So if you have to think about, say, potential innovations which are possible, and we are just hypothesizing here, that could happen on that kind of product when it comes out finally. We would like to hear some of the thoughts that you have on that.
I mean, we have got very little time to digest the circular. But see, in terms of innovation, I think it could be, I find it very difficult to answer it, but let me just make a guess. So we said that in this business, and assuming it is going to be, for argument's sake, similar to credit card, in the sense that there will be either an interchange or interest income available from day one. Either of the two things are available. So in my assessment, as we just discussed, the cost of servicing is significant, and there's no denying it, right? So cost of servicing, just a cost of inbound call at a call center would be at between 30 to 40, 50 rupees per call, right? Also, there is a huge cost of transaction at a smaller ticket size. Yeah? Also I'm talking CC on credit card as well. So the costs are going to be substantial. The key is that you get A, lesser losses, B, the customer whom after all said and done you have acquired a customer, you want him to spend and spend substantially, right? Then only you have some amount of revenue. So in my view, one has to solve for use cases. Say, foreign transfer also, currency. Can there be some markup, etc. available? Can there be use case in the commercial card equivalent kind of a space, right? where you get a lot of transactors, you get spends, you get some money, some merchant somewhere, some corporate would be interested in 2, 3 day, 5 day, etc. kind of a credit that is available on the fly, and then you still make some amount of, but these are high volume things, and then probability there is some scope for making money. Also at a bank level, if I am to think about it as a bank, I am looking at it as a channel to get more and more NTB customers. And when you look at it from a bank perspective, you don't look at a standalone P&L of a product, you look at a P&L from a customer perspective. I think there's scope there, unless you multiply it with all of it put together, given the interchange and, assuming it is interchange or it is a daily outstanding balance credit, probably the income pool is not substantial enough unless you get scale, unless you get lower losses, and unless you take a full bank view at a customer level. I think then only it will become meaningful for the bank as an acquisition channel.
Can I add to that?
Yeah, please go ahead.
So if you look at this powerful tool where you have, I think you mentioned 300 million customers who are on UPI. And this is a very radical thought. What would it take for each of these 300 million customers to be given a line? So if we follow a low and grow strategy, because the cost is very less, if there is enough information about these customers in the RuPay network or UPI network, can we whitelist all these 300 million customers and say, you have a line of, let's say, 500 rupees, you have a line of 600 rupees, please come and use. And as they use, can this 500 become 50,000? That's a very powerful thing. Because the cost of issuance is not there. The information is already available about these 300 million customers through what they have done through UPI. And that completely transforms the industry. That's the radical thinking we need. Again, if we start thinking it's credit card, we will be stuck at 40 million.
That's a very interesting thought, because even for one of our customers, we built an experiment book and we said, okay, this is cost and this is a calculated risk that if it doesn't work out, it doesn't work out. But it started with saying, let's, for this set of customers, issue a very, very small credit. And as we start getting more information on the credit behavior, we'll keep building it up. I think that works out really, really well for the banks, because one is this and the other is there are other products to be offered to generate revenue. But yeah, my heart is with fintech, so sometimes also think about them, saying that if you're limited to a single product, what more can be done? But one thought I missed when we talked about the...
Fintechs can partner with us.
And the partner banks. So one thought actually I missed on, I kept talking about profitability and getting scale and adoption on the issuer side, the merchant side. And you said the product is very smartly constructed. That means on a lot of P2M transaction, we will end up getting some MDR, which hopefully, if managed well, is enough to cover the business and generate some profits. Now, once the merchant, and I go back to my older days when if you wanted to buy a cold drink which is not cold, it is 20 rupees. If you want it cold, because it's coming from the refrigerator, it's 2 rupees more. Right? That's why this guy wants to charge for electricity. So this merchant, smaller guy, when he starts realizing that there is an MDR being charged, and he sees in his book that it is going out, will there be a pushback? Because even now, when you try to use a credit card at a certain size, they say 2% more lagega, especially jewelers. So you know how much jewelry I buy. But anyway, so will that reduce the adoption on the merchant side on this one? And on this one, Anil, we can start with you, but Rupesh, I would like to get your views as well.
See, commercials is open for negotiation, right? It depends on the suppliers and the consumers. So there's an equilibrium which will reach at some point in time. In my assessment, the velocity that is likely to happen on the UPI credit card is going to be so attractive that merchants will not be able to push their case through. I think, and merchants will see the benefit of a higher ticket size coming because of credit card. We are already seeing in whatever 2 or 3 months of UPI credit card business, the transaction size is on a credit card is significantly better than maybe a UPI otherwise transactions. Merchant will see people coming with higher purchasing power because of the credit instrument. That is the tool with which Today, most of the BNPL, etc. work, right? So they see that, customers' purchasing power is significantly increased. They will get the footfall. Just imagine two merchants, one of them accepting a credit card, the other not accepting a credit card. And let us assume that these are very small merchants, right? So this is a pan wala shop. And he starts accepting credit cards. You will suddenly find that some of the people will start going to the other shop to buy the pan because he is giving that transaction on credit card. And once the velocity will be such, and that is my assessment, the velocity in the next 1.5, 2 years is going to be so substantial that both of them will have to agree. And then some equilibrium in terms of interchange will be arrived. I think the economics will play out. That's my assessment.
So I agree with what Anil said. Credit is known to increase sales of the merchant. So I think that's the driving factor behind acceptance of credit. But also, there's going to be a demand pull from the customers. The customer will say, I want to pay using this. You have to accept. Otherwise, I'm walking to the next shop. So ultimately, the guy needs to sell. So a combination of increasing sales of customers and demand pull of merchants and demand pull from customers is, I think, will carry it through. That's my view.
Understood. So Prashant, on this one, when we look at the transactions which will happen, say even credit card on UPI or credit on UPI, and we know the existing customers, do you think it will be new transactions which will increase the pie further, or there is a chance because of rewards and other things, and because this is a new customer who is new to, say, rewards kind of setup, it ends up cannibalizing a certain portion of the account-based UPI transactions that were happening? Is that a thought that came across in your discussions when we were thinking about this?
Yeah, Hemant, you are absolutely right. So when we were designing this product, this was certainly one of the debate points that, of course, the movement from account-based transactions to credit card is certain. And that will cannibalize, credit savings-based UPI transactions. However, at the same time, if we look at it, it gives customer power to, increase their discretionary spends because they are getting a free credit period, right, of 45, 50 days. At the same time, they are also getting benefits of getting rewarded for those spends, which earlier in the account-based spends, they were not getting. So I think for customers, this is more beneficial in terms of getting rewarded, in terms of getting free access to credit. And the third point which I want to make is this gives customer a power of, spending very, very frugally or, thinking before spending. Because it gives a customer a power to analyze what kind of spends they are doing, because they are getting the statements, unified statements for their credit cards on UPI spends. So, a customer will think before spending. So I think that's what has gone into the discussion.
Understood. So this 4 minutes I see is the final 4 minutes, is it? Fantastic. So I can keep asking questions, but I wanted to be sure that unlike the previous panel, I give some time to our audience if they have any question to ask it. So I'll just open it up to the audience. If you have any questions, you can ask it. And if you can direct it to a certain person, great. Otherwise, we'll decide who takes it up.
Hi, thanks for the panel discussion. Certainly my favorite of the day. While payments has been a door opener for, let's say, cross-sell and lending forward, the Lion's market share on payment in terms of UPI volumes has been with, say, the leading fintech players, right? I'm just very curious that how do banks plan to build that engagement, whether it's with the retail consumer or with the merchant, to really up the game on lending? Because, today, as a consumer, I would barely open my banking app to make a UPI payment. Today, majority of the merchants don't really use banking apps to accept payments either. So, how does this lending way forward look for banks is a question I had in mind.
Good question.
Right. So, so you're from?
Hi, I'm Kushal from Mintok.
Kushal Minto. So my personal view is for banking to be effective, efficient, banks should be invisible. And that's the philosophy we follow. we embed our products into the customer's life. So if you are in Google Pay, I'll be there. If you are in PhonePe, I'll be there. If you are in Cred, I'll be there. See, nobody wakes up in the morning thinking, I want to go to the bank. But you wake up in the morning saying, hey, I need to maybe pay my kid's education fee, or I need to pay my mortgage, or I need to buy a house. How do we enable that? That's the thought process that we follow. So if our customers are in those apps, and I'm able to embed my product into those apps, use information, the context, and at the right time, at the right price, provide that service to the customer on that platform, my job is done. So that's how we think about it. Obviously, we need to partner with those platforms, and that's what we do. We have a partnership agenda. In fact, one of my responsibilities is to build strategic partnerships with the bank. So if you're a fintech, if you're a platform player, if you're an ecosystem, do speak to me. That's how we work. And finally, the end goal is to serve the customer's need.
Take one more response to it. See, every bank now has a partnership team, right? There is a reason why the regulator very clearly said that this is open only to banks. The regulator fully knows that the velocity lies with the fintechs. So I am reading that the regulator wants the banks and the fintechs to work very closely. And hence I think that, this team which is working, which is supposed to work on partnerships, they will have a very important role to play. There will be tech integration, there will be real-time movement, and things will be STP. I think that's for a customer, he will never know what is going on in the back end. But eventually, that's how it will play out. And fintechs will also be able to choose which partner they want to work with, because there will be enough and more banks who will be competing for that business. I think this is very, very good for the ecosystem.
Good evening. I have a question for Sajish and Anil. I'm Pavitra. Coming from your pedigree, your company's pedigree, are you all actually focusing on the bottom of the pyramid? Because that is where the opportunity is. So Yes Bank has a certain profile of customer, DBS has a certain profile of customers. And you're also talking about servicing the customer at a certain cost and being profitable, the customer being profitable. So is there a dichotomy in this?
Dichotomy in terms of serving at a cost which is...
The opportunity is at the bottom of the pyramid, and which is not exactly profitable. It's going to be a volume game if you want to penetrate into that market. So do organizations, do banks like Yes Bank and DBS seriously look at that, or is there some other model that you have to work out to capitalize and reach out to that segment of customers? For example, I'm talking about, if you're talking about new to credit, say drivers and peons and those who work in beauty parlor and salons. So those kind of customers, how will you reach out? How will Yes Bank and how will DBS reach out to those customers? Or are you looking at a different model of reaching out to them? Or are they not your target segment at all? I mean, you can refuse to answer this.
So, so there are 2 points here, Pavitra. It's a very good question. Now, if you look at the ability for a bank or somebody who is providing the balance sheet to give out loans to the customer, you also need to ensure that the loan comes back, because you have other stakeholders like shareholders to answer to. What we have done in many markets, including India, we have tried and used non-traditional information about the customers, whether be it their telco data, whether be it their e-commerce data, data in the phone with their consent, to be able to understand which customer can be given what kind of a loan. So that is one part of it. We don't have in our strategy to say that we will not do new to credit customers. If we are able to identify a customer's ability and intent to pay through traditional or non-traditional means, we do go ahead and serve that customer. That's number 1. Number 2, we have in our motto something that we do which is making impact beyond banking. So it's not just on the P&L, but for example, if you read the newspaper last week, we committed $1 billion to be spent over the next 10 years on activities which are outside of banking as our give back to the society. So those are the 2 broad areas that I would say that we try to do to have that impact beyond banking. Yeah.
Okay, so let me also attempt. So I think I completely agree with Sajish that giving money is very easy, and there are, many stakeholders who are interested in knowing how much of money is coming back. Now, some of the solutions that lies, there is limited which a bank can do in the absence of data about a customer. Now, one of them could be, say, for example, today, so you are a pass out from a category 1 institute, no credit history, nothing, even you are a student, there are banks which are willing to lend out something. Now, all these over a period of time, banks have done these small pilots. You take calculated risk and then see, okay, this works, this doesn't work. And if it works, then you start and go ahead. Right? That's the way, you do in cases where you have absence of adequate data. I think the way most of us, and that is where I think the solution lies in solving for credit. In a couple of questions earlier also I did mention, one has to find a way, can there be a standard across the industry way to find, or maybe let us say a very revolutionary thing, let me say. Imagine that at a bank level, at a regulator level, we are able to identify that this customer has defaulted on a UPI loan somewhere. And it is tagged in the back end that this customer then cannot do more than 2 transactions a month, for example. So there is a very strong penalty for the customer to not pay back, right? And then the appetite of the banks will increase, right? Similarly, if there is very limited information available for the bank, but there is some alternate data which emerges, and there can be a risk share agreement with somebody who is providing that data, so that banks have a higher appetite to take those kind of risks. So that's the trade-off. All said and done, banks are a for-profit organization, and the biggest limitation which I see in this entire ecosystem is that you should not lend to somebody from whom you cannot collect. And hence we'll go by that design principles only. I mean, most of us would do. I think that a larger solution at scale has to come, at a industry level body to solve for it. I would.
Just adding to both Sajish and Anil's point, I think UPI has a deep-rooted citizen scale and which they have attained in years so far. If you see, there are fintech players who are providing the payment solutions to the customers who wanted to make the payments to the merchants. And if you see, the kind of data these fintechs and the third-party apps have for the customers who are making the payments is across the accounts that they are maintaining, right? Now, if you see the kind of, or the plethora of data they have of the cash in and out of a customer and the kind of spending that they are doing from the payments, that's where, the UPI power is, and that's where the scale which, we have attained through UPI. Now, when we talk about credit cards or when we talk about lending, that's where I think banks and issuers need to work collaboratively with these third-party apps to attain that scale so that they can hit to the bottom of the pyramid. That's what I think the question is. Yeah.
Thanks. I think that's all the time we had. Thank you, gentlemen, for your time. I really enjoyed moderating this panel and learned a lot. Thank you. Thank you very much.